What's up guys, Dennis here with yet another very important Prime Strategy series. Now, as you guys know, I usually record these videos on the weekends. Since I started it, it's been 5 weekends and this is episode 4. So it's not every weekend that I provide one of these videos, but I'm gonna do my best to keep consistent at it and do it at least every second weekend. Anyway, the Primed Strategy Series episode 4 is all about key trading levels. So in episode 4 of the Primed Trading Strategy Series, I will be diving deep into educating you on exactly how we set key trading levels and spot important support and resistance levels, which can then be connected with our patterns to increase the probability of a trade working out. Key trading levels are exactly that, what they stand for. Important areas in the market which might signal a reversal in the market or even a continuation or breakout. To me, these key trading levels represent important areas in the market where hedge funds, banks, central banks, and so forth believe that, well, that's an important price and a reversal might be due, but a breakout would signal strong momentum too. Of course, we need to watch out for fake outs. So we need to be really attentive and use that really important asset that we have. And what is that? Well, your most important asset in trading is your attention. Anyway, in this video, we will be going over the following. How to find key trading levels using the Dow Chain Channels indicator, how to connect key trading levels with our patterns and increase the odds of our trade working out. That's pretty much it. The video will be quick and educational, and we will head straight into the charts so I can show you firsthand how I do this. You ready? Let's go. Okay, so we're looking at Euro USD. What I will do is I'm going to go through a couple of different assets, ranging from forex to commodities to indices and even a bit of crypto. And I'll show you exactly how I, well, find key trading levels. Now, the analysis process we are going to be using is the multiple time frame analysis. What we're going to do is use the primed way of doing that, and that's by checking the past, the present, and working on the near future a little bit. Now, what will be important is that the only indicator we have here is the DC set to 30, the Dow Chain Channel. There it is. Then it's not here, then it's here, then it's not, then it's here. I'm going to show you exactly how to use this. It can be used on absolutely every chart, but to show you specifically for day trading, we are only going to be using the 4-hour chart, the 1-hour chart, and the 10-minute chart. We're going to start with Euro USD, and we're going to use the recent price action here. We can start from all the way here. What I'm going to do is I'm going to go from top to bottom and find key trading levels. The only thing I'm looking for is basically price action creating these straight lines. Now let me explain what these straight lines mean. Price action is coming with strong bullish momentum to the upside. It finds resistance and begins moving down and creates a straight line. Creating that straight line with price action touching that level is a strong resistance. We do have other types of resistances too where price action comes, such as this level here. Let me show you. Right there. The Dow Chain Channel creates then this straight level here, which would be classified as a resistance. And if I put it in there too, you'll basically see price action using that level right there as a support. But it's also spiking down to this level here as a resistance. You get it? And this would really indicate a strong bullish momentum, more specifically because this is an important key level. This right there has been a key level for this here, and then we have a very strong bullish continuation. You see that? Beautiful. Now, let's continue and let's start building up our chart, and I'll show you exactly what we'll do. So, we don't have to go all the way back in time, because if we do, then our chart's going to be full of trend lines. We don't want that. We want to combine what we're going to do now together with our attention. So when you're trading the markets, the last thing I want you to do is really rush into a trade. But more specifically, I want you to focus on this little green level and just zoom out a little bit and see, does it add up to something? Does it add up to something important, more importantly? Because it does add up to this level here, but it doesn't add up to an important level such as this one. So we don't have an important resistance level right now where we are at, based on what we see on the 4-hour chart. So let's start from the bottom. We'll take this level here. There's the support. Boom, we go to the next one. And then we go all the way down. And you can see the steps being created here. So we have a bearish move right until this level there. So let's zoom in here and I'll show you what I mean. Boom. Check this out. So the first place where price action touched, right there, see that? That became a pretty important support. We have a spike, rejection, spike, rejection, spike, rejection, spike, rejection, close, and price action moves up. We now have our next key level. So you can separate them with different colors if you want. The 4 hour can be black, the 1 hour can be blue, whatever makes you happy. Next, we come up here, we don't have such a strong level, so we're not going to do that, but I'm going to get this one here because this one seemed to be a bit longer than, of course, this one. Then we go back down, boom, what do we have? Support from the past, that means we move to the future, and we have this. Okay? Now we start going down. And when we come down, we have this level right there. Support, bounce, breakout. We continue going down. And you can see price action using that same level right there. See that? Rejection, rejection, breakout, and it continues going up. That same level we just put. See that? Beautiful. Good. Moving on, we're going to go all the way back down now, and we're going to get this level here, the first level it touched. And that's a support. See that? Rejection at this level. We go back down, support at that level, resistance, breakout, support, whoop, try to break, fake out, still support, we continue up. Okay, so we've done the 4 hour chart. We're ready, but the past doesn't make us money. So we can't really act on it right now. Let's move down to the 1 hour chart and see what we have here. So this is really nice now. Check this out. I want to show you something important. So we have those key levels, right? And check this out. Euro USD with a beautiful contraction reversal pattern. See that? See? And guess what? A reversal candle. Where? Right around the support level. And by being on the 1 hour chart, we don't have to go so far back now. So we can just take from the upswing here to the downswing here, and let's start doing that together. So we have price action moving. No, this level could be important, but it broke down quickly. We would have drawn it anyway in the future. And if we do that, in the past, sorry, price action breaks this level, comes right back, creating a fake out right there. Let's zoom in. So creating a nice little fake out right here. But then we break the level. We come to the next one. We have the spike. And right there, we have a rejection. This would signal price action going down. Now, what is a rejection? It is a candle that tries to push up and closes down and creates this little shadow or straight line. That indicates there is somebody saying, let's go down, guys. Get it? Anyway, so we come back down. We already have this level. We go back up. We already have that level too, pretty much, more or less, right? So what we could do is set this level in there too, just as a precaution. But to make things a little bit more interesting for us, we can change the color, and I'll make it a little bit light blue here so it stands out. So 1 hour will be light blue. Moving on, we don't have anything special until this level here, which support, breakout, resistance, rejection candle, sell. And then in the future, support, right? See that? See that beautiful fucking trade? Do you see that? There is a contraction pattern right here, followed by a beautiful reversal candle. Remember, we only have 3 reversal candles. A contraction, and guess what? Price action used an important support level. Support, resistance, breakout, clearly support. Check out those wicks. Check out those shadows right there. Look at this. Shadow, 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 right at the same level. So all you have to do is be patient and wait for the market to give you a signal, such as this. Look at that. And guess what? We traded this. Now look at this. Look at this. Let me show you. So this was on a Friday, by the way. So there's Phil with a gorgeous continuation right after that move, by the way. The market made a continuation on the 5-minute chart. So that Euro USD is flying. There it is. Look at this. Bullish momentum on the 4 hour. Let's check it out like this. So here it is. Bullish momentum on the 4 hour. You see the EMA being used right there. There's the contraction leading from the bottom to the top to the 38.2. There's that pin bar. And there it is. 10-minute chart. Look how beautiful this is. Boom. There's the continuation. Boom. It's not rocket science, guys. It's very simple. So we've mapped in our key levels. Clearly, Euro USD doesn't have anything specific going on right now in this range, you see. So we could find resistance and at any time. We don't know when that resistance is going to happen. But based on this, we have two scenarios now. Possible support here or here. And also, if we go down to the 10-minute chart, check this out. We could be using, see this, right there as our support. So maybe price action could come down. We'll wait for an indication of a pattern, hopefully, and buy till that level. Pretty simple, right? Now, we went over one forex pair. Time to go over a commodity. Let's go over the big one, gold. So let's remove everything. So like I said, we're going to zoom out just a bit. We don't need to get the whole price action level. Let's start from here. We have a resistance right there, right? And we have, oh, let's make them black so they stand out. We have a resistance right here. Pretty interesting one, right? And then price action goes down right there. There's a resistance, sorry, support. And guess what? Lines up with that level right there. Now, check this out. Price moves to the next one. There it is. There is that resistance from here, pretty much working out this time and then this time too. Now we won't map this one in, but we will the next one, and that's this one here. And then you can see price action creating rejections at that level. I mean, you can trade this without even the pattern and still make money, but we don't advise that. Moving on, next one is right there, and we have a clear fake out. This would be a selling indication. Very strong rejection. But anyway, we continue. Next one's right there, right? And check this out. Price action goes to that level, creates that rejection, moves down, rejection, rejection, rejection. Price goes up, breaks that level, and then rejects that level again. Let me show you. There it is. Rejects that level. And guess what? Boom. Right back down to where? Our new key level. Capiche? Now it's important to understand as well, while I've got you here, that you should always look at the closing of the price, such as this, and the low. Because sometimes you'll find something like this. This is a rejection candle coming to the close, not to the low. Okay? So you never know which market is going to target what, but you need to pay attention to both. Moving on, we now have a resistance here. So guys, as you see, we've mapped in our 4-hour chart. We have all of the key levels for the current price action movement. And what happens is we move down to the 1-hour chart. Now, when we're in the 1-hour chart, we can just start from here, go down. There's the support. There's a resistance right here, which was used. Check this out. Boom. There, rejection, push up, support, push up, breakout, fake out, mind you, go up, go down, very erratic movement. Now we all know what's been happening with gold. It's had very crazy movement over time. So yeah, pretty crazy. Now we don't have to map in everything here, but whatever. We'll go like this and we'll see, and then check this out. So if price action, check this out. So we see that price action is finding rejection here, but clearly that is this level here, which also, by the way, has had a massive rejection recently. Now, price action does this rejection, comes here, uses that level. We'll change it as light blue because it's the 1-hour. And price action uses that level, creating this massive rejection, pushes up, one more rejection, right? And one more rejection. But what do we have, guys? What is the important thing you see here? This, right? Right? There is a contraction forming. Check this out. There it is. And it's coming right to that level. And boom, right to the next one. See that? That's gold for you. Now let's go. Okay, so that's the end of episode 4. As you've seen, it's pretty easy to find key trading levels using that very basic indicator, the Dow Chain channel set to 30, and you put the up and the bottom levels in steps on TradingView, not in line charts. This is exactly the process I use to find really cool and really important key trading levels. Now, I didn't really go into it on the 10-minute chart and stuff. I'll do that live with the community and show you exactly how trades are found. This strategy series was literally about showing you how to find them and nothing else. You always got to connect them to key trading levels and even put some candlestick analysis into the mix to increase the probability of your trade working out. Because at the end of the day, you need to remember that success in trading is not just about certainties. It's literally trading about with probabilities. You will lose money, but your edge has to keep you. So in essence, you need to have one of two edges. An edge that makes you much bigger amounts of money than you lose. So essentially you can lose lots of trades and then win 1-2 and you're back in the game with massive profits. Or you need to win a higher number of trades and have your risk reward anywhere between 1.5 plus. But that's a whole video for another time. Thank you for watching this Prime Strategy series, and I'll see you guys in the next one. Bye bye.